A scene script. Have you ever stopped to consider why investing is so crucial for OFWs like you? Let's dive right into it. Firstly, investing is a key to financial security. As an overseas Filipino worker, you work hard, often away from your family, to provide a better life for them. Investing is a way to ensure that the money you earn doesn't just sit in a bank account, but works for you, multiplying over time. It's a way to create a safety net, a cushion to fall back on during unexpected circumstances or emergencies. Secondly, investment is a strategy for wealth accumulation. It's not just about saving, but growing your savings. With the right investments, your money can grow exponentially. This can lead to financial independence and the ability to afford a lifestyle that you and your family desire. It's about turning your hard-earned money into an engine that generates more money. Thirdly, investing is about future planning. It's about setting aside money now so you can reap the benefits later. Whether it's for your children's education, buying a house, or even planning for retirement, investing can help you achieve these long-term goals. It's like planting a seed today and nurturing it so you can enjoy the fruits of your labor in the future. It's also worth noting that investing can help beat inflation. Yes, that silent wealth killer. Without investment, the value of your money decreases over time due to inflation. But with smart investments, you can outpace inflation and maintain the purchasing power of your money. Investing, therefore, isn't just about creating wealth. It's about creating options. It's about creating a future where you're not constantly worrying about money. It's about creating a life where you can enjoy the fruits of your labor without constant financial stress. So let's remember, investing isn't just about making money, it's about securing your future and that of your family. Before diving into the world of investments, one must first understand what it truly means. So let's break it down. Investing, in its simplest form, is the act of allocating your money in the expectation of generating an income or profit. It's about putting your money to work for you instead of just letting it sit idle in your bank account. Now, there are several types of investments you can choose from, each with its own set of benefits and risks. The key is to find the one that aligns with your financial goals and risk tolerance. Firstly, we have stocks. When you buy a stock, you're essentially buying a piece of a company. You become a shareholder, and your investment's value rises or falls with the company's fortunes. It's a bit like riding a roller coaster. It can be thrilling, but also nerve-wracking. Then there are bonds. If stocks are like owning a piece of a company, bonds are like lending money to a company or a government. In return, they promise to pay you back with interest over a certain period of time. Bonds are generally considered safer than stocks, but the potential returns are also usually lower. Next up, we have mutual funds. These are investment vehicles that pool money from many investors to invest in a diversified portfolio of stocks, bonds, or other assets. They're managed by professional fund managers, making them a great choice for those new to investing or who prefer a hands-off approach. Lastly, there's real estate. This can range from buying a rental property to investing in a real estate investment trust or REIT. Real estate can provide a steady income stream and potential tax advantages, but it also requires more upfront capital and management. Remember, each of these investment types carries its own set of risks and rewards. The important thing is to do your homework, understand what you're investing in, and make informed decisions. Investing is not gambling, it's a calculated risk for a brighter future. Starting your investment journey might seem daunting, but it's easier than you think. Let's take it step by step to help you get started. Step 1. Educate yourself. This is the starting point for any successful investor. Learn about the different types of investments available, how they work, and what risks and rewards they carry. Familiarize yourself with terms like stocks, bonds, mutual funds, and ETFs. There are plenty of resources available online, free of charge, to help you understand the basics of investing. Step 2. Define your investment goals. What are you saving for? A house? College education for your kids? Retirement? Knowing your goals will help you choose the right investment. For instance, if you're saving for a long-term goal like retirement, you might want to consider riskier investments like stocks, which have the potential for higher returns. But if you're saving for a short-term goal, a safer investment like a savings account or a bond might be more suitable. Step 3. Choose the right investment. This is where your education and goals come into play. Different investments suit different goals and risk tolerance. If you're risk-averse, you might want to stick to bonds or mutual funds. But if you're willing to take on a bit more risk for the chance of higher returns, stocks or real estate might be the way to go. Step 4. Diversify your investments. Don't put all your eggs in one basket. Spread your investments across a variety of assets. This helps to balance out the risk. If one investment performs poorly, others might do well. Diversification can help protect your money and increase your chances of achieving your investment goals. Step 5. Monitor your investments. Investing isn't a set it and forget it kind of deal. Regularly check on your investments to see how they're performing. You might need to adjust your investment strategy based on changes in the market or your personal circumstances. And finally, step 6. Seek professional advice. If you're unsure about anything, don't hesitate to seek advice from a financial advisor. They can provide personalized advice based on your individual circumstances and help you make informed investment decisions. Now remember, investing is a long-term commitment. Don't expect to become a millionaire overnight. It takes time and patience. But with careful planning and discipline, you can grow your wealth and secure your financial future. Remember, the first step is always the hardest. But once you get the ball rolling, it gets easier. Investing can be scary, but fear should never stop you from securing your financial future. Indeed, fear is a common human emotion, especially when it comes to the unknown. And for many, investing can seem like a vast, uncharted territory, full of complexities and uncertainties. It's completely natural to feel apprehensive about taking that first step. But let's demystify some of these fears and misconceptions about investing. One common fear is the belief that investing is akin to gambling. You put your money on the line and you might lose it all, but unlike gambling, investing is not based on pure chance. It's about making informed decisions, understanding market trends, and building a diversified portfolio to spread out risk. Another fear is that investing is only for the wealthy. However, this is far from the truth. Thanks to technological advancements and the democratization of finance, everyone can invest. There are numerous investment options available that cater to different financial capacities. Even with a modest amount, you can start your investment journey. The fear of complexity is another barrier for many. Yes, the world of investing can be complex, but it doesn't have to be. There are many resources available that can help you understand the basics. You don't have to be a Wall Street wizard to start investing. It's all about learning and growing at your own pace. Lastly, the fear of losing money. It's true, investing comes with risk, but remember, no risk, no reward. It's about managing that risk, not avoiding it. The key is to invest in what you understand and diversify your portfolio to spread the risk. Fear is natural, but don't let it hold you back. Investing is a journey, and every journey starts with a single step. So take that step. Overcome your fears, educate yourself, and start investing for a secure financial future. You might be wondering, why should I start investing today? Well, let's dive into the reasons. The first and foremost advantage of starting to invest early is the power of compound interest. Now, you may be asking, what is compound interest? Simply put, it's interest on interest. It's the snowball effect that happens when your earnings generate even more earnings. You receive interest not only on your initial investment, but also on any interest, dividends and capital gains that accumulate. So your money can grow faster and faster as the years roll on. It's like planting a small seed today and watching it grow into a mighty tree over time. Think about it this way. If you invest $100 and it grows by 10% annually, you'll have $110 after 1 year. Now, if you leave that money untouched, you'll earn an additional 10% on $110 the following year. That's $11, not just 10, which brings your total to $121. Over time, this effect can lead to your wealth growing exponentially. But wait. There's more. Investing early also gives you a longer horizon to ride out the ups and downs of the market. The stock market, for instance, is known for its volatility. Prices rise and fall, sometimes unpredictably. But over the long run, the trend has historically been upward. By starting to invest sooner, you can weather the storm of short-term fluctuations and reap the rewards of long-term growth. Moreover, starting to invest early helps you cultivate good financial habits. It encourages you to save regularly, live within your means, and think long-term. Investing is not just about making money, it's also about becoming financially disciplined and independent. Another compelling reason to invest now is inflation. This is the rate at which the general level of prices for goods and services is rising, and consequently, the purchasing power of currency is falling. If you just hold on to your money, its value decreases over time due to inflation. But if you invest that money, you have the potential to earn returns that outpace inflation, preserving and potentially even increasing your purchasing power. In conclusion, investing early can lead to significant financial benefits. It harnesses the power of compound interest, allows you to weather market volatility, fosters good financial habits, and helps combat inflation. Remember, every day that you put off investing is a day that you're not earning potential returns. Remember the old proverb, the best time to plant a tree was 20 years ago, the second best time is now? Well, the same applies to investing. The best time to start investing was yesterday. The next best time is now. Don't wait for tomorrow, start today. Let your money work for you and see how it can grow. Still not convinced? Let's hear from some successful OFW investors. Picture this. Maria, a nurse working in the UK, was once like many OFWs, sending almost all her earnings back home. But then she decided to set aside a small portion of her paycheck each month for investments. Fast forward to today, Maria has built a tidy nest egg that not only provides for her family's needs, but also gives her the financial freedom to pursue her passions. Or consider the story of Carlos, a seafarer working in the Middle East. He realized early on that his job was not going to be forever. He started investing in mutual funds and stocks. Despite the ups and downs of the market, Carlos stayed the course. And over the years, his investments grew. Today, Carlos is happily retired, living off the returns from his investments. Then there's Anna, a domestic helper in Hong Kong. Anna may earn less than Maria and Carlos, but that didn't stop her from investing. She saved diligently and invested in small-scale business opportunities back in the Philippines. Now, Anna owns a thriving sari-sari store and a small piggery, providing her with a steady income stream. And finally, let's not forget about June, an engineer in Singapore. June decided to invest in real estate back home. With careful planning and patience, June now owns several rental properties in the Philippines. The rental income not only supplements his salary, but also ensures a comfortable retirement for him. These stories are not unique. There are countless OFWs who have made the wise decision to invest, and their lives have been transformed as a result. Investing is not just about making more money, it's about securing your future, achieving your dreams, and gaining financial independence. These stories prove that with patience, discipline, and a little bit of courage, anyone can succeed in investing. So, are you ready to start your investment journey? We've walked you through the importance of investing, especially if you're an overseas worker. You've seen how understanding investments, taking the first steps, and overcoming investment fears can be a game changer for your financial future. We've underscored why there's no time like the present to begin. We've shared inspiring success stories of individuals who, just like you, took that leap of faith and are now reaping the rewards. Investing is not just about making your money work for you. It's about securing your future, ensuring you have something to fall back on when you decide to hang up your work boots. It's about building a legacy for your loved ones so they can have a solid footing in life. Remember, the future is in your hands. Start investing today and secure a brighter tomorrow for you and your family.